Good evening, ladies and gentlemen. Thank you so much for tuning into Economic Times ETBFSI news portal, where we are going to discuss the budget 2022, and we're going to have the top voices from the BFSI sector. So, in this series of budget 2022 with ETBFSI, we are going to talk about the banking sector first, and I'm going to have somebody who carries not just a banking experience but a great experience from the microfinance segment. And let me welcome Mr. Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank. Mr. Ghosh, glad to have you for this session.
Thank you. I'm
So,
happy.
to begin with, thank you, sir. To begin with, Mr. Ghosh, I have a couple of questions, but I will start with ECLGS. As everybody is actually kind of rejoicing with the budget because it has boosted the capital expenditure, and whole India Inc. is actually thinking that now the consumption cycle will begin. But considering the extension which they have already offered to ECLGS scheme, which was offered maybe just 2 years back, there is a hope that the mid segment, which is specifically for the SMEs and MSMEs, will get a big boost. They have also thought about the hospitality sectors and other sectors limited to it. What is your reading about this? Do you think that the extension of ECLGS scheme will actually help the micro segment to grow rapidly?
If I say that the MSME is a backbone of Indian economy, and it is a different types of class: micro, small, and medium enterprise. So this the pandemic situation, micro are more impacted and than the medium. So ECLGs are given the government in a last year, which is for this segment people will get the 20% of their outstanding, which is the government will give the guarantee. It can help to get the good liquidity of this the small and medium type of enterprise, which are suffering in this time is more. For that region, whatever the extended in this year, it was from actually earlier one will be like to timeline is in March 22. Now it has been extended to March 23 and also allocated 50,000 crores. Especially also given the focus on that the what I say that the tourism and entertainment and this industry is focusing also on that, so that can be helped on that. A small and medium enterprise again will be get the new fuel for their enterprise. And whatever sometimes this type of small are affected, they are also some employee are lost job of this type of enterprise, and they will be revived to come back to the job. That will be also helped to give the good amount of the job of the people with this support. It can very helpful for this industry.
Okay. Uh, but if I ask you specifically now, considering the changes, the challenges the government went through and the changes which they made in today's budget, do you see a growth now in MSME sector? Do you see that the MSMEs, the micro segment, will come to your bank and look for more loans because they are more confident now? Do you see the pickup in the credit growth of this particular sector now because they will feel more confident? Do you see that?
Now, if we see that the budget allocated the capital expenditure, which is the 35% is more from the last year,
Exactly.
it is a very good decision by this budget, which will be helped to expenditure will be go to the roads, ports, airports, railway. That will be helped on that linked of this the small and medium enterprise to supply of this the all this type of construction and real estate that can be helped on that to do it. So it is very helpful this budget in that sense to this large number of multiple impact will become to this the ground level. So it is actually it is helpful. Another point, that the related on this the
Correct.
MSME, there is another fund has given which is a 2 lakh crore
Okay.
earlier also given, and it has been extended on that, which is called that the credit guarantee scheme for
Hmm.
MSME. So
Right.
credit guarantee scheme of MSME means the when this the we are providing the credit to this the MSME, they are fully secured by the government, and that is also helped the confidence of the bankers, and bank also come forward to lending to this industry, and
Okay.
automatically they will be recover from this pandemic situation.
Mhm. Okay, noted your points, sir, but there are a lot of highlights in the budget. In fact, if you ask in a short term, perhaps there is nothing exclusively for a customer with in terms of tax slabs or something. But if you look at, like finance minister said very clearly, Azadi ka Amrut Mahotsav se leke agle 25 वर्ष tak. So it's a long term strategy where they want to connect the rivers, they want to build a great infrastructure, and that is why 30% capex has been increased to 7 point 50 lakh crores. My question to you is, execution is always a challenge. In last budget, the government announced many policies, national infrastructure pipeline. The divestment plan was huge, but we didn't achieve much out of it. So do you see, that the policies are nice, policies are very ambitious, but when it comes to ground, it takes a really long time to execute. And perhaps that may again, hold back the corporates or the India Inc., in terms of coming forward to invest.
Now, you are one time isn't correct. I also see that whatever the budget have been prepared for capital expenditure, if it is a long term, so it will be take more time to go to reach the hand of this the mass people. So if it is an execute very much immediately, it can be helped multiple impact to the mass people immediately. It's a depend on that the how the details the execution plan have been prepared by the government and accordingly drive it to do it on that.
That's obviously that's a fair point, sir. But what kind of change now do you see in the sectors? Will they feel more confident now in terms of because everybody was waiting for a budget since the third wave was also hitting them. Now, do you see some positivity?
As a banker, I know from my customer point of view, their
Right.
confidence has come when their liquidity ensured by the government or regulators. So that is the best way they will get that confidence. They can be run their business because the worst is over. 2 years of pandemic is over. People are now coming back to the business. When they are thinking to coming back to the business, they have need in a funding. So some people who have been running the enterprise, which enterprise has lost all this the liquidity, they will be like to bigger challenge to return back, and so that this type of support have been helped through those enterprises. They will be get the confidence, and they will be get the new fuel, and come back to this the normal very quick on that. So that will be like to think in a confidence from the banker perspective,
Right.
bank's perspective, and the customer perspective. So both the perspective, this confidence have been helped by the government decision.
Okay. Very well said, sir. And it's a very bold and a very important statement that you made here that the worst is over, which is a very important one. The 2 years timeline is over. That feels also give us some vibes, positive vibes. Before I move on to other questions which are related to affordability, affordable housing, and retail, let me again quickly ask you: can we see now the credit growth will be back? Because just now you said the 2 years pandemic is over now. So can we go back to the credit growth that we had envisaged? I'm not saying where we were 2 years back, but that we had envisaged the credit growth. Because when we see about credit growth, I'm not talking specifically about the large corporates. I'm talking more about the mid-sized corporates because that growth matters the most than sometimes the large corporates.
Yes, before the budget, I also saw
Okay.
in the ground level the worst is over and people are returned back to this the normal. And this is a final quarter of this financial year.
Yes.
And this quarter always is a credit growth has come highest compared to the other 3 quarters. And what we see the trend is coming on that. So that is the credit growth is coming to normal in this quarter. So that is the feelings we find, and I hope that the budget will given that addition confidence to the bank and the customer, so that it will be quick will become to this normal.
Okay, noted your point, sir. Now let me move your focus to affordable housing. right? In fact, the banks have been really kind in terms of reducing the rates and offering schemes to the retail segment. In certain cities, because real estate is driven by cities and not typically the the cost per se. In certain cities, there is a huge pickup. But considering the major developments which the budget has actually offered, major incentives which the government has given specifically for this sector, what kind of growth do you see in this sector now? Do you see a big pickup in retail and also affordable housing segment going ahead now?
So these two are always sometimes this type of 2 years pandemic little bit affected more, and they are also recover quick. So that is the trend we find out on that. Why the retail customers, there is a small business, they are depend on that business, and they have not need to return back quick to for their survival. For that region, we find out on that this type of customer who are affordable, or you say the small ticket size of the loan based in the enterprise, they are very quick come back on that. So we saw that they are coming back very good way from the last quarter, and this quarter also you can like to see that they will be like to fast on that.
Okay, noted your point, sir. So there are many other things to which the government has also initiated. Creating digital units specifically in a different locations. They kind of spotted 75 districts. Digital has already picked up well, and banks or the financial companies are the strong in terms of adopting that. How do you think the digital will benefit the kind of separate units which will be created in this district level? The finance minister said today.
No, if we recall on that, the
Yeah,
finance budget have been mentioned also.
yeah,
The more than 100 of districts who are backward districts
yes.
that are covered under this the financial inclusion, and where the people will get the banking services in a good way, and
Hmm.
very good improvement have been seen in the last budget.
Right.
And now it is looking on that India is in gradually people are also going to the digital transaction.
Hmm.
If we see that the our bank is a 88% of total transaction happened by digital.
Hmm.
So in need on that, the house specialized of the branch. This is specialized branch, this budget, I will say that 75 districts will be like to set up by the commercial bank, and a
Hmm.
specialized branch for digital. Only they will be
Hmm.
provide the digital banking services to the all
Hmm.
customers on those areas. It is a
Hmm.
very good milestone have been created. It will be helped to the banking industry. Future will be look on that how the big number of branches can be opened for digital services. You can say that the customer will be go. There is no need of that person in the branch. They will
Hmm.
be automatically withdraw. They can be automatically deposit. They can also
Hmm.
transact the money. Everything they can do by uh, digitally. So this is a
Right.
very good initiative and good encouraged for the bank. I hope that our bank also to join on that, and will be
Hmm.
like making a how this 75 will become to another 175.
Right.
That will be like to future gradually like to come as a India as a digital banking India.
Right. Noted your point, sir.
And this
Sir.
digital banking also help on that to
Yes.
connect with the banking industry of Bharat with India.
Hmm.
And when we say that only one point is needed, how quick we can be educate the customers
Hmm.
about the digital transaction. There's a
Right.
lots of challenge. So that
Hmm.
it will be also needed to add on that digital literacy will be start of those branches to
Right.
success of this the digital branches.
Right. No, no, noted your point, sir. In fact, I also want to take your opinion. I know the fine prints are not out yet. I do not know how will it executed, but digital rupee has been trending a lot because the finance minister said that CBDC will be the central bank digital currency will be launched in FY 22-23 itself. In fact, earlier the Reserve Bank governor had also backed the CBDC over cryptocurrency. In fact, RBI was always against cryptocurrency, but they were kind of looking at CBDC, central bank digital currency. So now digital rupee is going to be here. What is your view on that? Do you think this will be another, we may say, what you can say, another feather in the crown like a UPI?
I have the two things in here. First point on that, as of now, India, some people are already doing it, this transaction doing, but it is not legally declared about it, how it can be like to do, and what is the form on that. So in that sense, the always a service are developed by the banking industry or regulators on the basis of people's demand.
Right.
And we see that the people demand on that part.
Right.
So it has been now regulated by the central bank that can be better way. People will be not get some any advantage of fraud. So that can be helped on that digital rupee. And the second question you are asking on that, yes, I also agree on that. We have a need in that the huge this the digital rupee literacy to the large number of people.
Right.
Otherwise, some of also as a challenge, some people also face as a cyber crime or the fraud.
True.
That will be as a chance of this because our country is a 70% people living in rural, and those people only know the banking transaction, deposit and withdraw. So when this type of the instrument will go to that level, there is a big challenge until they are not educated properly.
Right. So we spoke about the ECLGS and MSME schemes. We spoke about digital. We spoke about the affordable housing. Now, one or two very important points that I want to ask you, and that is actually the integral theme of the budget, is the Atmanirbhar Bharat, which the government has been talking about since last 2 years now. And I don't think anyone else can give me a better perspective here than you, because you're catering to that segment, specifically the micro segment, before even establishing Bandhan as a bank. I would like you to tell us, the the provisions which the government has made under the Atmanirbhar Bharat to take the micro segment next level. What is missing it there? Do you think, because you will be realizing a lot of pain points at one side, the government is ready to finance, but a lot of challenges are still there in terms of clarity. A lot of challenges are still there in terms of the approvals. So, what do you think need to be done, in fact, to boost these micro segments under Atmanirbhar Bharat scheme?
If I say that the yes, the Atmanirbhar, the Bharat will be needed for our country
Yeah.
because it's a large number of people. If their small amount of per head income increase, it will be impacted to the total country per capita income,
Yes.
which is very boost on that. So that we have to need to create a livelihood
Hmm.
and income generating activities in the ground level, which is we are, you are correctly say that has started as a microcredit, now as a bank. But we also find out on that the large number of people is a bank now, 1 crore 75 lakhs women borrowers
Hmm.
are developed their enterprises under this the bank, and they are started with a zero, and many of that borrowers are created. There is a 4 5 employment newly with their growth of the business. If I say
Right.
that the every of these customer are created one employment, so that
Hmm.
is happen on that 1 crore 75 lakhs extra employment generated by this the poor family, and it is possible. And so that now they are coming to the stage by stage. One is the zero. Now their income has come to the 10,000. Now it is income has come to the 50,000. What will be happen to the next?
Hmm.
And we are also created some of this the development. Those are graduate from one level to the next level. We have given to different support, not in a group, as an individual MSME type on that. And but newly, I like to mention about it till now. It is
mm,
underway working on that.
mm,
IIM Calcutta
mm,
and World Bank
mm,
and Government of India and Bandhan are
mm,
jointly starting a project
mm.
who are successful entrepreneurs have been developed already in the
Right.
grown from the microcredit.
Mm,
What is the next level we can be like to give the mentoring support
mm,
under this incubator of IIM Calcutta, and they
mm.
can become on that the next level of the Indian best MSME. So it is now
Yes.
starting on that very soon. It will be done that. I hope that this is a good initiative taken by the government with the help of all of others. That can be also helped to develop the from grassroots level best entrepreneur, and
Mm,
also it will be impacted to the huge employment generation of the country. So I hope that it is needed on that. Some missing on that.
mm.
We are reaching to this level of the people, and
Great.
these people is there is no papers. They do not
Yes.
understand anything of the formal banking credit and this and that.
Mm, mm,
We have
mm.
to take some time to educate them, develop them. It's a very costly matter on that. And
Yes.
then gradually they are coming up on that. And
Mm,
I saw that the 90% is a success case has come
mm,
to the to one level to the next level.
mm,
So need on that and the government support. If you say that ECLGS is a help on that,
mm.
of course it can be more. It needs some help on that to build up their capacity, skill.
Great.
They
Great.
can be run that enterprise when it is a little bit bigger. And
Mm,
what is the next level? I hope that
mm.
there is a skill development investment should be linked with this type of microcredit customers, and
Great.
they can be also get the benefit from that.
Okay, noted your points. So, what is your outlook here? If I could ask you quickly, maybe I have 2, 3 more minutes. What is your outlook in terms of how long do you think will take for this sector to come into the formal segment? The challenge is also this that a lot of them are in informal segment, not only just a digital education, right? How long do you think will it take for them to become a really Atmanirbhar or to contribute more in Atmanirbhar Bharat segment?
Now, if I see that my studies say
Hmm.
first 3 years they are not self-reliant.
Great.
After 3 years,
Hmm.
any of these the borrowers or family are
Hmm.
coming as a self-reliant, and
Great.
then they are like to make other, because you see that when I touch this customer, they have
Hmm.
a lot of borrow from the money lenders.
Hmm.
They have been borrow money from the dowry of daughter marriage. They have
Yes.
been also borrow some money for the children education. So
Yes.
they first earn and repay those money and gradually remove. And they have need in a minimum 3 years time on that. So three
Great.
to 4 years time they have need to come up as a break-even point in that sense. And from the fourth year and a half, they are coming in a very good way, surplus and self-reliant way to running their business.
Okay, noted your points. Quick, just two small, very quick questions before I leave you. Considering the changes that we have seen in budget, it makes you confident, no doubt about it. It makes a lot of people, specifically market industry, also confident. But being a banker, does it make you that confident that you will start disbursing freely now?
No, when the banker is decided to the lending to the one of enterprise or person, there is a many of the things will be like to look on that. So yes, this the budget CLGS and CGT MSME have been given the confidence on that one part. We'll be like to we can get that, yes it is. If I say that the affordable housing 48,000 crores have been allocated for the people who are the Pradhan Mantri Yojana, it will be create a very big business opportunities for others. So it
Right.
is, of course, it is in confidence. If you see the government say that 80 lakhs affordable housing will build up, and the
Yes.
land, and also the all approval will be like to speedy. That also given the confidence on that the maximum of this investment will become to rural and semi-urban areas. So people
Right.
will be linked on this, will get the job, and their business also like to improve. So all together, as a bank, we have the confidence on that the future growth of the economy.
All right, sir. Thank you, ladies and gentlemen. I have Mr. Ghosh with me who spoke a lot about ECHL scheme, microfinance, and how the budget is going to have a positive impact on all these sectors. Thank you so much, ladies and gentlemen. But don't go away. Just stay here for 2 more minutes because we're going to have another session on insurance at 4:30. After that, a session on NBFC and then a session with an economist. So we'll have back-to-back sessions. So stay tuned to etbfsi.com. And thank you so much, Mr. Ghosh, for sharing remarkable perspectives here on the budget day. Thank you so much.
Thank you all. Thank you to all of you. Namaskar.
Thank you.
Thank you.
Welcome back, ladies and gentlemen. We just had a session with Mr. Chandrasekhar Ghosh from the Bandhan Bank, and now I'm going to have Ms. Vibha Padalkar, MD and CEO of HDFC Life Insurance, and Tapan Singhal, MD and CEO of Bajaj Allianz General Insurance, for this panel discussion. Vibha, I'm glad to have you. Tapan sir, glad to have you.
Good to see you, Amol. Long time.
Yes, yes, sir. How are you, Vibha?
Very well. I was telling Tapan that because of you, I'm, somewhere in between Mumbai to Delhi. And, I
Great.
could not say no to you.
Thank you so much for that. And it's a big day. We were expecting a lot. And I remember a nice comment by economist. He said that, we were expecting something much better, and the government has even fulfilled that. So, looking at the capex cycle, which the government has tried to give, I think 35% of capital expenditure, which is much higher, come to 7 to 7.50 lakh crores. There is nothing directly specifically for an insurance sector, but the kind of investments which the government is going to make in the infrastructure sector and in the whole economy, I'm sure automatically it will benefit all the sectors. So, Yohanan, let me come to you first and take your opinion in terms of how did you read the budget? What are the key highlights that that attracted you?
I thought it was a good budget for various reasons. Overall, it was a very growth. It is a very growth-led budget. Headline of 6.4% for FY23 in terms of fiscal deficit. Very bold moves in terms of capital spending, infrastructure spending, allocation for railway. All of those items. Yes, we don't know how inflation will pan out, or overall in terms of balancing the budget, how the deficit will still be reined in at the 6.4% level. But nevertheless, I think directionally, as a nation comes out of the pandemic, it is the right signal, absolutely, to say that let's get back to work. And government will support it, and that is the single biggest takeaway. Wherein government is going to do the heavy lifting, and then saying that, by the way, I'm doing all of this, and corporate growth will follow. And she also mentioned PPP a couple of times, and so I think that spirit of partnership as against you guys versus us. It was very much that we are in this together. We can do wonders in terms of investment. Also, some of the new aspects, I think we'll have to see how that will pan out. Wherein she talked about the digital rupee. A lot of
Right.
headlines were grabbed because of that. Would be interesting, at least directionally. She talked about blockchain, so there has been a fair bit of yo-yoing on that, on cryptos and so on. I think it appears that there are indications that government is willing to embrace new tech. She also mentioned startup community innovation quite a few times. Um, Privatization is one aspect that didn't come across very clearly, apart from couple of names that she talked about. So these two. So just tempering my enthusiasm would be in terms of inflation and privatization agenda. But otherwise, overall, I think a very good budget.
Okay, noted your points, Vibha ma'am. Tapan sir, what do you think? What is your first comment on the budget?
I have a mixed reaction. No, now, first and
Mhm.
foremost, I'm super happy to see the focus on clean energy, the
Right.
ESG part. I think that is something which, as a country, is a very, very good step, and this is something that we should be doing. So I'm very happy about that. I'm very happy on the infrastructure spend. I'm very happy on the security bond which is there. I'm very happy on the national, health digital mission which is there, because I
Yes.
think repository of health data overall and usage of it to save lives, fast reactions, create infrastructure on that is going to be phenomenal. I think we have not discussed this enough, but we underestimate the power of a digital repository of health, because in my belief, in 3 to 5 years, that will lead to a lot of benchmarks in terms of how the ecosystem will work out. So these are something I'm very super excited about. What I'm disappointed about is I have a strong belief, and I mentioned it many times. Government and insurance companies together can make a huge difference to the society. I think that is something which has been one of it. Expecting a universal health coverage for all. Some states have started that. So I'm expecting that if that could be there, because if you have health cover for all as Indians, and we are very close to being actually do that now. Matlab, let's say if we had talked 5, 7 years back, maybe it was something which we thought is far fetched, but today I think we can. It's a stage where we can talk about healthcare for everybody, health insurance for everybody, because that would lead to the average life expectancy of Indians going up by 5 to 7 years. When you have that, that is. It's a very clear correlation between health insurance for everybody and life expectancy. Second is on terms of nat cat losses, which is happening all across. If you look at the economic losses versus the insured loss, there's a huge gap. So a lot of people are being pushed below poverty line. So parametric solutions, like we came out with government health, for states where people could cover people below poverty line. A parametric solution for all the coastal states or something. So when you have national losses of this scale, and now you're having 4 or 5 in a year, it's no more once in a 20-year phenomena. That could have made a difference to social life. Third, on the GST part, my expectation was on health. If you look at in terms of the health insurance premium moving up, there are restrictions that for 3 years you can't move it up. So the insurance company is taking the full brunt of covering COVID, and they're incurring huge losses. So I think time was there where the government also should have chipped in by lowering the GST. At least the price for the customer does not go up, because then that becomes a huge difference. So those are my expectations, insurer, and I felt that this should come together as a collaboration, insurance companies and government, for making the citizens' life much better. But having said that, as Viva mentioned, in terms of the progressive look, the future outlook, the way it's addressing solutions for be it ESG, clean energy, infrastructure, data creation, data lakes, the digital ecosystem, super excited on that. So those are my first reactions.
Okay, noted. Again, meaningful points, Tapan sir. I think this would have been a better time if they would have done something on the universal health policy, considering the the pandemic that we are going
Exactly.
through. Yeah, but I think valid point. So, Government, let me come to you. Generally, when the budget comes, tax slab is one of the major attraction when it comes to the customer's point. There is nothing on that front because that is directly connected with the what you can say the insurance companies here. Do you see, there will be a change in the consumption considering the confidence which the government has poured into the all the sectors, and insurance will also get some benefit out of it.
It's a yes and no answer. There will be more. There will be more credit. There will be more of overall borrowings, as well as overall growth led, even for small SMEs, MSMEs, and so on. And that will percolate into more consumption. But to my earlier point, I do believe that it's not very, that the jury is out there in terms of inflation and how much inflation is going to eat into their discretionary expenditure. Now, insurance is by no means discretionary, but in the basket of goods that otherwise are there for various things, I think that will continue to be under question mark because of inflation. So that to Tapan's very valid point on, God forbid, there's another pandemic or another variant or another avatar of this virus, which is not as benign as fortunately this last one, Omicron, was. Then again, there could be a fair bit of erosion of one's savings because people don't have adequate health insurance or other forms of insurance. So all things being equal, hopefully consumption should increase, and also thereby demand for insurance products. But there are too many unknowns, like I just mentioned. Also, in terms of our ask, some of the things that have not been looked at is the ATC, which is very crowded, ATD for health, that also hasn't been changed for a very long time. And medical inflation, for example, is maybe 2.5x or thereabouts of normal inflation. Also, pension, our ask has been on more and more senior citizens are coming into that category and outliving their retirement age by over 20 years. And in the same, inflation is eroding into their savings. So that there's a real probability that people will run out of money because they're outliving their savings. And that risk is even higher than passing away prematurely. And that is double taxed today. Annuities are double taxed, which is very non equitable in the hands of a pensioner. Also, lighter touch on GST, on protection, on annuities. These things could have given a good indication that people should focus on this. None of that has happened, and we'll continue to engage with the government that it's in their interest also to ensure that there is an insured population, that senior citizens are taken care of, and so on. So yes, all of that has been given a miss.
So quickly, let me ask you: by any chance, do you see a negative impact on the sale of the insurance? Specifically, the premium is going ahead because ultimately, a lot of insurance companies have increased the premium considering the losses which they faced in last 6 to 12 months, and there is no GST respite. The prices are not going to come down. There are no additional tax benefits considering the inflation is very high and the tax slabs are very limited. So do you see some negative impact on the sales of insurance?
I'll take that. I don't think so in the near term. People are, thanks to the pandemic, people are beginning to certainly realize the need for insurance. 2 years ago, Amol, it was why do I need? This is an expense. I'm going to outlive. And I would have paid all this money to an
Yes.
insurer, not understanding the nature of insurance. But today, I think people are very noticeably not asking those questions. They are asking questions slightly more evolved to say what type of insurance, how much, if an ex person in my family is not really a breadwinner, does he or she still require insurance? These are very good questions to ask, which means that an average person is thinking along those lines, and that is very noticeable thanks to now the third wave of the pandemic. So I actually believe with prices going up, there is going to be a increased demand paradoxically, because people are going to
Right.
realize that this is only a one-way street. And prices, if you look at whole host of things, if you look at what the paint sector has gone through, they've taken anything between 15 to 25% price increase because some of the key raw materials have gone up by 50%. If you look at pharma, if you every sector, so why should insurance be any different, wherein prices have not corrected for a very long time in terms of
Hmm.
mortality cover or other types of pure protection? So people will start understanding that this is par for course, and this is not a bargain thing that they, or a tick in the box that they should
Right.
have. This is something that they need to allocate something from their
True.
basket of savings to cover themselves.
So basically, people will not go for insurance just as a sake of a tax saving instrument going ahead.
Absolutely.
Uh, yeah, valid point, ma'am. Tapan sir, I want you to explain us more in terms of digital health pipeline, which the government is talking about, and how will it actually benefit? Because there is one aspect which the government is very positive on since last couple of years is pushing the digital very aggressively, and this time also not only just startups but creating a whole ecosystem. They're not talking about digital rupee, which can be an, I won't say equivalent to cryptocurrency, but they gave something which people wanted. The CBDC, central bank digital currency. The same way, I believe that the whole financial ecosystem will get benefit out of digital. So, in that perspective, how do you think national digital health ecosystem will actually play a major role to boost the insurance?
So, Amal, first, I'll talk about boosting insurance later. Let's talk about a data lake of health. And I've been talking about it. Let's say insurance companies have
Right.
huge amount of data. So let's talk of COVID. When COVID started, you had different treatment protocols being followed by different hospitals all across the country. And some were giving good success. The transmission of this information was taking a lot of time, the best practices. So it took months before you could reach to a protocol of what has to be done. Now imagine insurance company settling claims. They know what protocol we followed, what is leading to improvement, what has not led to improvement, where the fertility has gone up. Now all that is
Right.
there with insurance companies. Yeah. Now you put it together, run an analytics. Can you imagine the power, Amol, in terms of how fast transmission happens of success rates of different protocols we followed to doctors, and to analysts, and to give an answer that this is the best thing going forward right now. So the
Right.
entire thing in terms of number of lives that can be saved, Amol, the number of treatments that can be refined at much hyperspace, the kind of research which can happen. Can you imagine that? Today, because of disjointed, and by the time the papers come through, seminars happen, research happen, by the time
Right.
all this gets together, it's years. How many people lost their life because they could not get the best protocol treatment which could have happened? Somewhere is happening, somewhere is getting saved. I think data in health is going to play a very, very big role. So if you look at it broadly, insurance
Right.
is, to me, is always secondary. The first thing is what benefit does it do for the country, for people, which is huge. That to me would be a huge step. And I've always been pushing this, that the insurance company data should be used for analysis. Not only for this, let's say road. We know exactly where accidents are happening normal. We know exactly what are the
Yes.
pressure points. We know where the TP claims are happening. Put the data together. Find out why the accident is happening. Is the road too sharp? Is the light not there? Just a small difference would save so many lives.
Right.
The power of data the insurance companies have is phenomenal. Now. Putting it together
Right.
to solve country's problem is something to that. So I see, from my perspective, when I say
Yeah.
I'm excited about this, is that this would be a right step in that direction, where you put the data together. From individual's perspective, it's a huge step again. Like for me, as Tapan Singhel, I right now I've been transferred to so many places. Luckily, Pune, I've been here for 10 years, for the time. Otherwise, every 2 years I'm in a new city. So my health record, I not know myself also. Kab kahan pe kya tha. My existing doctor called them up and asked, "Can you tell me what medicine you gave me 3 years back?" The new doctor
Right.
wants to do. So a unified, for me, as an individual is going to be a huge difference. Now, let me give you an example of my father. He orders medicines online. No,
Hmm.
otherwise, for him to get his medicines, to go in the store, aaj nahi hai, tomorrow it will come. How will it happen? So I think the impact of digitalization in any space is huge, but we should know how to use it. The issue
Right.
is that it should not be like a genie which you have the Aladdin lamp, but do not know how to use it. That would be sad. My point is, are we thinking in this direction? The way I just put together. Are we
Hmm.
looking at data sources across the country? Which industries have used data sources for solving what problems? Are we putting it
Hmm.
together? Are we churning it together in a data lake? And are we coming
Hmm.
out with solution which save lives and upscales the
Right.
citizens? Is the bigger question that we should be asking ourselves.
Hmm. Okay. Okay. Valid points. Well, let me come to you. And insurance companies, specifically life insurers, the largest investors into the capital market. Obviously, you have your own criteria of IRDI, but considering the volatility in the market, considering the pickup that we have seen in the stock market, how do you see the whole, the economy picking up? Obviously, the economic survey has predicted 8 to 8.5%. But how do you, see the whole growth, not only of an insurance company, but whole economy going ahead? And will you be more, what you can say, bullish in terms of infusing your capital, your policyholders' money into capital market, far more aggressively now?
So I see. I'm very gungo about growth, but
Hmm.
growth and valuations are two slightly different things. India has had its fair share of attraction in terms of FII money flowing in. We
Hmm.
did see that, and also it was well timed with the bounce back after wave one, and then
Hmm.
wave two was not so much of a dampener in terms of growth, fortunately.
Hmm.
And so FII monies and capital markets did exceedingly well. And
Hmm.
towards the end of last year, in terms of calendar year, the
Hmm.
entire hitting the market of a lot of fintechs
Hmm.
and some of the unicorns
Hmm.
started happening. So
Right.
all of that came together about this new buzz around India, and also it was juxtaposed with what was happening in China and the
Hmm.
flight of capital from China for some time at least in the more recent times. So it was a perfect set of events that came together for the capital markets in India. Having said that, we are seeing some tempering. We also have to see it in terms of what is Fed doing, and hopefully
Yes.
without a tantrum, the tapering happens. But we are not really decoupled from what's happening there, what's happening in other parts, what's happening in Ukraine, for example, what's happening with crude.
Yes.
So all those things, if someone sneezes somewhere else because of those reasons, then India does still catch a cold. So one has to see this, but longer term, everything depends
Hmm.
on what horizon you're talking about. Longer term, no question about it, about what capital markets can do in India, and how they are headed. Yes, there will be some short term, or can be certain short term volatility, but I would
Hmm.
not worry too much. You asked about policyholder money. Absolutely. So whatever is the mandate of the policyholder,
Yes.
so unit link product, they choose how much is debt equity, and different kinds
Hmm.
of equity, even after they've chosen different kinds of funds. There's also a newest kid on the block of ESG fund, for example.
Yes.
So we have whatever it is that policyholders want to invest, and they can keep switching also. So we'll continue to see that. Our own money also, in terms of shareholders' funds, we do invest, and it's a
Hmm.
good mixture of debt equity. So very optimistic in the medium term, certainly on India Inc.
Right. Uh, Tapan sir, there is one thing or one theme the government has been talking about since almost 1.5 years, and that is, in fact, integral part of the budget also, which is Atmanirbhar Bharat. It's not. I'm not. My question is not directly related to insurance now, but how do you see this theme is panning out? Because even yesterday, the president said something very nice before the economic survey. He said that the defense has decided, the defense sector, the defense ministry, that they will not import 209 products which they were importing earlier, because the Atmanirbhar Bharat, that the companies here will manufacture that. How do you see this, step in terms of building India going ahead?
No, I think this is a very interesting and a very powerful step, but I think a lot more has to be done from what's currently happening. Because if you look at India's growth story has been mostly on the service side, in terms of industry. In the manufacturing side, it still can be better than what it is. So these are the right steps in that direction. I'm very happy to hear the announcement that happened on that. No, even on the infrastructure part, the announcement for the ports, which is to be looked into, or the multimodal transportation, which has been announced in the budget. These are all the steps in the direction for Make in India or Atmanirbhar Bharat only. So these are very powerful steps. But is it enough is the question. I think we still have to do much more on that. And to accelerate this, we have to be one of the manufacturing hubs for the world. I think that is something which we have to be there. And so these are very positive steps, Amol. But I think we can still do a bit more on this. So if you look at budget announcements also, these are all gearing towards the same Atmanirbhar Bharat in terms of putting together. When you put all the different pieces together, the directionally is moving towards that. But I think we should move a bit more faster than what we currently are in that space.
True. Vihan, do you want to add on Atmanirbhar Bharat?
All of this is in the right direction, whether it's Atmanirbhar Bharat, whether it is Make in India, whether it is
Hmm.
any of the Prime Minister's schemes.
Hmm.
This is almost at the grassroots. It's the right direction that they're headed, rather than just having dole outs.
Hmm.
Rather than just giving the easy money or freebies that are easy to do or relatively easy to do. I think having manufacturing in India, services in India, which are sustainable in long term. I think that is really what will sustain us as a nation to be
Hmm.
able to build on this. And we are a largely domestic-led economy compared to some of our other countries in this region, and that's a good thing to happen, because it also, my earlier point about decoupling, it helps you withstand some shocks from having preventing over dependence on other economies by
Hmm.
just import export. So I think that Atmanirbhar Bharat is dovetails into that broader spectrum of how do we decouple from rest of the world.
Hmm. Okay. There's one question I will ask, ask to both of you actually. It's more on the government company side, but again, belongs to your sector. So now the government is very aggressive in terms of coming with an IPO for an LIC. And the finance minister also said that, it will be very, very soon. Perhaps by the end of this financial year only, there will be a lot of updates on that. Uh, there are already private insurance companies, listed in the market. How do you see, because it's the largest company coming into the market, what kind of difference do you see in the insurance market when LIC comes into the market as a listed entity?
I only see positives. Number one, for the
Mm,
largest financial institution not to be listed was not an ideal situation. This will bring about a lot more transparency, a lot more disclosures, accountability that comes with every listing, whether
right.
you're the largest or whether you're the smallest, whoever hits the
Mm,
market. So that is a great positive. Second is it helps the government itself in terms of its objectives. Um, I think this is a red herring, frankly, when get asked the question, because LIC has been there as a competitor, as the largest life insurer. Nothing really changes. So your capital structure does not suddenly mean that overnight it gives you extra bandwidth to do something that you didn't have earlier. You were the mightiest earlier. You continue to be the mighty. You're the biggest and you're the oldest. And no one's taking that away. So I don't think that it's an unfair advantage or a disadvantage because of IPO. And apart from the advantage overall that I talked about, yes, there are
mm,
some tweaks in terms of the 95/5 ratio is going to be tweaked over. I think they have some 3-year horizon or thereabouts to get to 90/10 and further. So that is more for an internal. This is a split of profits between your policyholder and shareholders. So shareholders will get a higher level of profits. But right now, it's fairly small.
mm.
What is your embedded value? How much is it growing by? What are your margins? All of this disclosure will bring about transparency. But apart from that, I don't really see anything significantly differing from a competitive dynamics over the next 3-4 years.
Okay, valuable thoughts, Vyoman. Tapan sir, along with LIC, I would like you to also comment on the privatization which is due for the few PSU insurance companies which they are talking about. They earlier said about it. Obviously, there is no clarity in this budget, but they have already said that they will do it. So, what kind of difference will it have in the market?
So first and foremost, for the general insurance business, Amol, for many years now, 14, 15 years, you have an industry which is a combined ratio close to 117 to 120%. Combined ratio means for every 100 rupees earned, the industry is losing about 17-20 in the underwriting basis. Now, for so many, in the world, you have a situation like this. It has its own strain now. Not only for the government companies, you look at some of the private companies also. They are not able to sustain the business. They are being sold out. And you look at the government companies also, the privatization happening, but they can't sustain the business. The solvency has gone below the requisite level which is required. To me, it's a very sad state of affairs from the industry perspective. Because an industry which is vibrant, which is able to demonstrate the competence to underwrite well, is able to serve the customers well. India has just about 40, 50 insurance companies. Imagine a place like Singapore has 600, no? US has 2,000, no? So like, it's a shame. Our country should have at least 1,000 insurance companies, no, in the market. But I think the kind of environment which is there in terms of sustenance, if that is not demonstrated by the industry, then that would be a sad thing. So to me, when I hear this, I feel sad from industry perspective. I want all companies to be very strong, very vibrant, because India is such a huge market, and our penetration is still so low, and we hardly contribute to the GDP of the country, no, where a contribution can be at least, no, like 500, 600x of what we do today. So I think a lot has to be done. So the last thing we want to see is companies getting weak, companies getting sold off, companies getting merged. So it's not only about government; it's at the private level also. I've seen some companies which cannot sustain this. So I sincerely hope and pray that the industry comes up and is able to become much stronger than what it is, and there should be at least much more companies than what is today that we see, Amol. You unmute, Amol.
Yeah, sure. Certainly, sir. I think valuable points, and I can see the sector is picking up a lot of insurtech companies at least entering in this space. We have recently acquired another company that are going bigger. So I think there is a lot of exciting news in this particular sector. Wish the finance minister could have actually looked at GST or some tax slab, which would have really benefited the insurance industry far more aggressively. Actually, thank you so much, Tapan sir and Vibham, for sharing your insights here. Thank you so much, ladies and gentlemen, for tuning into this insurance session. But stay back. We'll be back after 2 to 3 minutes for an NBFC session. Thank you so much.
Always a
Thank you,
pleasure,
ma'am.
Amol. Talking to you. And
Thank you.
Vibha.
Thank
Thank you,
you.
sir. Thank you, ma'am.
Thank you. Thank you.
Thank you.
Thanks. See you, Tapan.
Hello and welcome back, ladies and gentlemen. Good evening once again, and welcome to the series ETBFSI Budget 2022. Let's get into the NBFC session and let's see what is that NBFC sector has got from the Union Budget 2022. And I have with me Mr. Umesh Revankar, VC and MD of Shriram Transport Finance Company. Mr. Revankar, glad to have you.
Yeah, very nice meeting you, Amol.
Yes, good to see you, sir. Ladies and gentlemen, and Mr. Revankar, we're supposed to have Mr. George Alexander Muthoot, the MD of Muthoot Finance, but unfortunately, I mean, somehow we are in a terrible time. Some major problems happen sometimes. So there is some family emergency because of which he's unable to join today. Otherwise, he was really excited to be part of this session. So let's hope everything is fine with him. And maybe we'll have a conversation whenever possible. But thanks. I'm glad to see you, Mr. Revankar, here. So, big booster budget. That's what everybody's talking about. Mr. Revankar, what is your first reaction?
My first reaction is definitely yes. It is a really big budget in the sense because huge capex spent and focus on infrastructure and first step towards Gatshakti Yojana, which is making India as a hub for international logistics and movement of goods. That's really, I feel overall the kind of focus given on the infrastructure, ease of doing business, and also simultaneously focusing on the rural area. Uh, I think finance minister has done a lot of balancing act and trying to give focus on certain challenges which to immediately to create an employment because the huge infrastructure outlay is definitely right focus because the employment generated out of real estate and infrastructure is huge and also they are trying to give some a focus on the rural area. Overall, I feel it is a very good, progressive, and bold budget.
Okay. Noted your points, Mr. Revankar, and let me get into some specifics. I had Mr. Chandrasekhar Ghosh sometime back here from Bandhan Bank, and also, Vibha Padalkar from HDFC Life and Tapan Single Firm Insurance, who also praised the infrastructure boosting which the government has made. Obviously, the capex cycle has been also increased to 35%, which is really interesting and unusual. But Mr. Revankar, my straightforward question to you is: does it empower you in terms of, does it make you more confident in terms of disbursing more funds or going aggressively in the market? Or, in other words, do you see a credit growth in your commercial vehicle segment now?
Definitely, yes. See, what happens is when there is a focus on infrastructure, automatically the movement of the goods are in bulk, like cement, steel, they all a requirement for building that infrastructure, and to some extent, it will have a impact on the real estate also, because there is also focus on the building new houses and infrastructure of tap water. See, all these things creates a demand for movement of large commodity products. So whether it is steel and cement, plus added there are so many other things which are bulk in nature move. So I believe the transport sector will have a big boost, especially for next 5 years till this infrastructure plan is implemented. And I feel the last 3 years, the heavy commercial vehicle have been witnessing a slowdown because of the overcapacity that has been built over the period. Especially between 15 to 18, lot of overcapacity plus the axle weight norms again created overcapacity that will get absorbed and the new demand will come. So for us, definitely it is for vehicle financing segment. Yes, it is a very positive, and I feel it will make us very confident to grow more than double digit in this scenario.
Right. Noted your points, Mr. Revankar, but as they say, devil lies in the details, right? And the government has actually initiated many plans. National Infrastructure Pipeline, which was announced last year, the Bharat Mala and the Sagar Mala projects were also announced. Obviously, there has been a pickup on the roadsides. Some 25 kilometers roads have been built every day. But what are the, has government tried to kill those gaps in terms of the major challenges that happens in the policy front specifically? to boost the infrastructure. It's not just allocating a budget and disbursing funds to the various ministers to the build the roads, but it's also about acquiring land. It's also about giving a lot of clearances. Do you see that is also going to happen, or the execution will still remain a challenge? What is your view there?
See, this government has been proactive. They have been forefront in acquiring land and making things easy for the infrastructure building. So I feel government is really doing a great job. Plus, they have now announced the National Infrastructure Bank. So what was lacking for the infrastructure is a long-term, long-tenor funds being available for the construction activity. Typically, bank lend 3 to 5 years, and for banks to lend beyond 5 to 7 years becomes a challenge because most of their resources are short term, which is
Right.
deposit in nature. So, getting a long term resources through a national bank which is focused
Right.
on infrastructure, I think is a step in the right step. Plus, they are
Right.
also talked about national ARC, which will
Yes.
probably help to take away some of the stuck proposal, which is
Hmm.
a long have been into challenge. So I think overall the clog will get cleared, and plus the resources will be made available for longer tenor. That will create enablement. So I think that's where, if at all, this plan of both national district bank, ARC plus the infrastructure bank both come in place immediately, it will give a lot of support for the infrastructure company to play a major role.
Okay. Uh, what do you think about the investments? Will the investors will be now more confident than ever to pump in more funds? Because uh, fortunately, on a GDP side, if you look at, we many times we had over ambitious targets. We used to talk about double-digit growth, or maybe a growth more than 9 to 10% or something. But the economic survey has come to a very conservative, numbers, 8 to 8.5% of a GDP growth. That is one. And second, the investments are the capital expenditure is the projection of capital expenditure is really huge. Do you think this will attract a lot of investments, or investors will be more confident now to pour funds?
See, I feel yes, increasingly international players who have long tenor source of resources would be interested in investing into India, because we have seen a lot of large PE investors and even the pension fund coming into India for
Hmm.
long tenor bonds and financing, or even buying some of the incomplete projects. So I think there are a lot of steps already being witnessed. So I think the international players are very keen to come into India, and India really gives, especially, uh, I think the infrastructure investment requirement in place like China have reduced
Hmm.
or likely to reduce over the period. They have to
Hmm.
move to a new place where there is a long-term development and the focus on long-term development. And India
Hmm.
is right time investing, and right time really showing the will to change the perception of the players who normally who come in for a very short period and go away. So I think the confidence internationally is improving, and we need to really work on that to get it happen, so that more players would be comfortably coming into India by giving a long-term vision and long-term plans.
Right. Like you mentioned in your first comment, the whole major focus is on the whole infrastructure, not just infrastructure, but a whole ecosystem. So they want to try to connect the rivers. They want to build a lot of things in and around highways, expressways. They also are focusing on swapping battery segment, because the electric vehicles is going to be a big push. What kind of opportunities do you see for a company like you, maybe, or the company specifically operating in a commercial vehicle segment? Because a whole ecosystem, specifically in the ESG, in a renewable energy space, ESG space, sustainable finance space, and electrical vehicles is getting created. So, what kind of opportunities do you see now?
See, there are so many opportunities emerging out of it. First is multimodal transportation, where the logistics They're trying to link river, railway, air, and road by uniform movement of the containers, and that enables the multimodal transportation, and that removes the bottleneck out of the transportation, because Indian
Correct.
logistics is one of the most expensive compared to the international, where they say it's around 14% is the cost of the logistics in India, and whereas internationally it's 8%. So that's the 6% gap. That if you are able, that this is a problem. If you are investing there, you are able to get result out of it, and definitely investors will benefit out of it. That's one. And second, as far as EV and other ESG funds coming into EV and battery swapping is concerned, that is something new. See, what will happen initially is it will happen mostly in the low-end vehicles, because the battery cost is very high, and as you use it in a heavier vehicle, the battery cost is likely to be much higher. So it will start with two-wheeler, move into three-wheeler, then four-wheeler, then six-wheeler. So it will gradually, as the battery cost comes down, then it will gradually move into other vehicles. So initially it will be mostly in three-wheeler, four-wheeler, and two-wheeler, and that is where the ecosystem need to be built. And that's where if you create a battery swapping standards, it becomes easy for swapping the battery and keep going on, rather than getting stuck with the battery and you need to buy a new battery or charge, find a place to charge. So building a proper standards and building infrastructure for swapping is going to create going to attract the many players to come into the lower end, which is low hanging fruits. Once we cover that, once there is enough infrastructure, then it's easier to move into the heavier vehicle or bigger vehicle. So I think that is the right, government is doing the right thing. By 2025, I expect EV to play a major role in the two-wheeler, three-wheeler, and four-wheeler. And from 25 to 30, it will start moving into the heavier vehicle. And maybe by 2030, even the kind of LCVs, six-wheelers would be on electric vehicle, provided that this technology is cheaper than the other technology. Because there's always alternative technology or fuel that is going to come and compete. Because today CNG is cheaper than diesel. So by providing more CNG pumps, you are going to move people from the traditional diesel to CNG first. Then from CNG to maybe EV or maybe some other technology will come. So I think people will definitely move towards the best source, which will help them, which will help profit margins in their business. Definitely, the people would prefer to go into CNG now, then maybe EV after some time.
Hmm. Okay, valuable thoughts there, sir. You're not directly related to hospitality sector, but considering transport is a closest sector to hospitality, we can say, and aligned in many ways. The government has actually considered and reacted on the hospitality segment's initiatives and the kind of challenges which the sector is facing, and they have extended ECLGS scheme and provided a great support over there. How do you see that is panning out specifically for hospitality sector?
I think hospitality sector, there are some blessing in disguise. Like many of the people who would have gone abroad today are trying to move within the India. So tourism is improving. See, if you take tourism within the industry, that's one thing, and then you come into the health sector. See, both are not related, but if you really put infrastructure to this, both the health infrastructure in India can attract a lot of international the patients to come into India and get treated. And the tourist destination in India, if the infrastructure is properly built, then probably we can even think of having why go to Switzerland, why go to Thailand when we can build it in India. So I feel that, there are northeastern states which are most beautiful. You have a lot of hill stations in northern belt which are very beautiful.
Right.
There are beach stations in entire southern India, the southern tip. We have such a big coastal line starting from Gujarat to maybe Calcutta. So not being fully utilized. I think building enough infrastructure, the infrastructure will give boost to the tourism and hospitality industry in general, and definitely health infra is going to really bring a lot of international. Uh, I don't call it as tourism, but international people traveling into India for the health benefit, which we offer one of the cheapest in the world, and we have the best doctors and health workers in India world.
Okay. Noted your points. Before I let you go, I still have 1 more minute left. Let me ask you one question. Obviously, the budget looks very ambitious. The projects are they announced are really interesting and unusual. But if I ask you one thing, that what did you miss in the budget? What you wanted to see which you didn't find today? What will be your answer?
See, just focusing on my industry, for NBFCs, we were asking for a refinancing agency or a bank or body for NBFC, because we feel that in certain times, uh, getting bank to lend to us becomes a little challenging. So we were looking for it. We were, because the way NHB is there for housing finance company, for NBFC, we need some kind of refinancing body, which initially we expected Mudra to do it, but we still feel that is something which we would be looking for, so that the NBFC, which is normally lends credit to the unbanked and underbanked people, they need a continuous source of resources. That is something which we still feel the government and the central bank to look into it, so that there is good growth for of the credit for the, of credit for the underbanked and unbanked community, especially MSME sector.
True. True. Noted your points, Mr. Revankar, and let's hope that the government will look into it. Actually, one interesting thing that the government has been doing is they're not relying on budget to announce everything. As and when they want to announce something which they think is important, they will announce it the other way around also. And I think they have taken many such decisions earlier. So, if they feel something like this, maybe they can do it without budget also. But great talking to you, Mr. Revankar. Thank you for sharing your meaningful thoughts and reactions on the budget at ETBFSI Live Budget 2022. Thank you so much.
Thank you, Amol.
Thank you. And ladies and gentlemen, please stay back. We will be back here after 5 minutes with an economist from RBL Bank, and we'll discuss the impact in an economist's perspective of budget. Good evening, ladies and gentlemen, and welcome back to ETBFSI Budget 2022 live series. I have with me the next speaker, who is the Chief Economist of RBL Bank, Ms. Rajni Thakur. Rajni, glad to have you.
Thanks, Amor. Pleasure as always to be on this forum.
Thank you so much. So I think there is a lot of positivity. I have been talking to set of panelists. I spoke to a banker, then I spoke to insurance players. So they showed some negativity because there is nothing on the GST front or the tax slab sides, which generally boosts the insurance companies. Then I also spoke to an NBFC player who's also very positive about the infrastructure development and believes that the consumption will grow. So to begin with, what kind of big or booster the government has given through the budget, and do you think that they have managed to maintain the balance between capex and consumption, which we were expecting actually?
So I'm sure each of the speakers, and I have been watching this program live, have their own perspective from the industry they're coming from. As an economist, when I look at the budget, the whole macro landscape is very, very critical for me to understand it. We are in a year when the pandemic uncertainties are still hanging. They've not gone away completely. At the same time, it's the post-pandemic budget in certain ways. There are certain uncertainties on the consumption outlook. Government needs to front load investment till the point it can crowd in private investment. At the same time, for monetary policy to start normalizing without tightening the financial conditions or financing conditions for private investment, it has to start on a way of fiscal consolidation as well, gentle fiscal consolidation as well. So on one side, it has to pump prime the economy. On the other side, it has to get onto a certain way of fiscal consolidation path too. And to that extent, it was a very pragmatic, very realistic budget, is what I would say. True, there were some boosters missing or some feel good component that on the taxation or many side that generally touches the sentiment side. But I would overall kind of rate it as a very pragmatic, very realistic, and focusing on the structural issues kind of a budget.
Okay, so on that missing aspect, I will come to you and maybe ask you what is missing in the budget. But let me ask you immediate question here. Since the industry was expecting capital expenditure from the government side, they were expecting a big boost on the infrastructure side, which is there now. 35% is unusual compared to what the government used to do it earlier. Do you think now the private consumption, private investments will pick up? Do you think that the corporates will not think twice before investing or before making their capex plans?
So, I mean, yes, on a YOY basis, there is a almost 34-35% increase in the current year and another 25 projected for next year. So that's a big boost in capex expenditure. And overall, we're like touching 20%, not really 18% of the total expenditure on the capex side. The whole idea is to set up the infra and all necessary backup in a way that it crowds in the private investment. But when we start thinking from the private investment perspective, there are a couple of prerequisites. One is on the global growth side, which we saw present in last year. The other is, of course, in terms of predictability and stability on policy side, which budget and the previous announcements before this has kind of been able to provide. There is a requirement in terms of corporate balance sheet being very active and healthy to leverage on growth. That's present at this point of time. The fourth element that still kind of hangs in uncertainty at this point of time is the excess returns expectations, to be realistic. The demand conditions, the demand outlook for the year beyond the pent up and normalization is still not clear when you talk to investors at an individual level. Uh, Till that comes in, and going by what economic survey has shown yesterday, in fact, there is some data on household liability and asset, and it kind of shows huge financial savings on the household budget. If that is indeed the case and it starts showing on consumption level, then it should be able to crowd in private investment. But for now, there is a tentativeness till we see demand conditions strengthening beyond doubt. And probably through the first quarter of the next year, we'll still see some of it coming in. But once private consumption has caught up onto pre-COVID levels, we should see private investment coming in because all other conditions are existing and strengthening the outlook, investment outlook. There's just one factor that's still weak. Hopefully that catches up.
So what is that factor? Are you talking about inflation? And also,
So
if you
that,
do, if you,
no, So
Yes.
that factor is on the consumption outlook. I
Yes.
mean,
Yes.
many of us economists have been batting for the K-shaped recovery in terms of income rate in the
Yes.
informal sector, in terms of how this is likely to drag on to the overall consumption going forward if this is not answered or addressed. And that's actually something that I see missing in this budget as well. Both the survey and the budget, I don't see an acknowledgement of the fact that there are some uncertainties on the consumption outlook. The policymakers seem to believe that we are running strong on consumption as well and will catch up. And I hope they are true for all our sakes, actually.
Right.
Um, I am yet to reach that conclusion given the data points that we are seeing. But if we do, then we'll see private investment coming in. If and when we do, at this point of time, that's one uncertainty that's hanging. So it's more on the consumption, which gets determined by income levels, rather than purely on the factor that market kind of tracks on inflation or borrowing. So those would be more critical signs for me from the budget.
Right. So, what I'm learning, from various experts and what I understood by copying the finance minister is this is a long-term budget. They're taking a view of 25 years because we're in a Azadi Mahotsav of 75th years and we are thinking about the 100th year. And we are, thinking about that year and considering and crafting policies according to that. That is one aspect of it. On the second side, everybody believes that this is a long-term, budget. Do you think that what we should do for next 25 years is there in this budget? Do you think that we are actually doing or just we are talking about it?
The answer to it is a little more nuanced.
Okay.
Does it lay out the thought process or the intention in terms of getting the structure right for next 25 years? Yes. I mean, there is a beginning of policy thought process in terms of skill development, in terms of digital infrastructure, in terms of uh, integrating all infrastructure,
Right.
rail, roadways, air, in terms of logistics as a big part if the economy has to grow. So, some of these thought processes are being laid out. Uh, it's just a start. For it to be really showing up in the economy in terms of productive gains is, I mean, as all infrastructure spend is generally a 3 to 5 year process. So for it to show up will take some time and hopefully we stay on track. So what it does is it builds up on lots of thought process we saw last year, consolidates some of those in terms of permanent stimulus as they called it. But
Right.
it's yet to show up gains, of course, given the nature of investment we're talking about.
Okay. Let me shift your focus to inflation. I mean, US is there. I mean, the policies, on schedule. The RBI policies on schedule. At one side, the principal economic advisor said that we still have a space for the fiscal in his economic survey. My question to you, Rajne, is how worried are you about the inflation?
So my view is on inflation is a little different from most of the economists at this point of time. We have to remember that Indian economy is not US. I mean, inflation is a US problem in genuine case, unlike in India where it's more of a supply shortage. So I do tend to agree with lots of policymakers that this is transitory, this is more supply shock driven, and this will normalize as post-pandemic world normalizes. So does it erode away from disposable income in short term? To a certain extent, yes, but it's not likely to be long lived. So I wouldn't really worry too much on inflation at this point of time. There are likely to be some data points where it crosses the target range in certain ways, but not for meaningfully longer way where it starts eating on disposable income. So
Okay.
most of the expectation still for next year is around 5.5. True, currently, given the way crude oil prices are looking, or given many of these uncertainties at this point of time, it looks difficult to believe. But give it a couple of months, and then things should start easing off. January just coincided with both geopolitical uncertainties and also Fed taper to happen. But as you've seen, even in the case of taper, there were a couple of days of high volatility, and it has already started to ease out. So hopefully, it should be a short-lived issue for Indian economy. And if and when there is a genuine case of inflation where we see demand level rising, wage levels rising, except in certain pockets that we see now, then it's probably a good problem to have. Then I, in any case, won't worry too much about it.
Okay. we were not doing great even before pandemic. I mean, obviously, we had certain growth numbers there. We were doing better than many other countries for sure, but it's not that we were really aggressive before even pandemic. So sometimes, I also don't want to believe in this theory that did we reach to a pre-pandemic level. I think it's better we create some another level, altogether. So thinking about creating another level or maybe approaching to a $5 trillion economic dream, what do you think the government should have added in the budget? What maybe one or two factors you wanted to see in the budget which you could not see?
So you're right. We were not doing great pre-pandemic. In certain ways, I think that pandemic kind of at least triggered the government to support the economy in certain ways. Otherwise, we could probably have seen worse days as well. Uh, so coming back, yes, we were not doing great, and that's why this whole need for some structural steps in terms of skill, in terms of health, in terms of infrastructure, were long overdue, much before pandemic came, and we were talking on many forums before that we do need to see some steps towards that. And what pandemic has done is kind of bring the thought process away from fiscal consolidation towards front loading the economy in terms of investment and consumption. So I, in that way, in that sense, look at it as a more fortuitous development. This is just a start. Does it answer the immediate risk on consumption levels? Not really. But what it does is it starts addressing some of the structural issues that were causing a hit on the trend level of the economy. What we still don't have, and I wish this budget or economic survey had given us, was a certain sense of what's the potential level. There is an output gap, is something that all of us say. At the same time, we do want to understand that how much are we potentially able to grow. It's like a big bang start of a big bang episode where you know that you're setting the right triggers for the potential level to grow up, but it's difficult to figure out an exact sense of what would be a good growth rate at this point of time to consider. Do remember that for the kind of employment numbers we want from the economy, it's important to stay above 7 to 8% growth rate for a consistent 5 to 6 years to really not drag the growth story. And it is important for us to kind of remain positive on the growth story to attract capital as well. I mean, at the end of it, we are an economy where capital is the scarce resource of all the three: land, labor, capital that we talk about traditionally. So for us to attract enough capital as well, it's important to stay on track on 7 to 8 plus kind of a growth trend. Uh, that's something that's in the short run doesn't seem very, very, I would say, likely. One is hoping, or given the kind of confidence in underlying trend in economy, in the economic survey and in the budget. So, I mean, as an economist, I only hope that that's a true
Okay.
assumption and it actually starts to show up.
Okay. Uh, the government has, kind of offered many stimulus packages in last 2 years. They also extended the scope of PCLGS and, kind of PLI or affordable housing. Do you think it will add? I mean, considering the fact that there is a fiscal space available, do you still think that the government will have a different pressure because of the extension, and this will continue for another 1 year now? What kind of impact do you see of this extension on the government's balance sheet?
So, yes, there have been many support programs that we've seen in last 2 years, and if you see the kind of revenue expenditure on most of these, subsidy items has increased considerably in last 2 years. Uh, Now this additional extension onto certain impacted sector is not likely to impact the government balance sheets to a large extent. I mean, the numbers are likely to be less than 0.5% of GDP at this point of time, just rough calculation. The important point is that these were the steps that also helped to save us from the worst. So when we start looking at, we do focus on the government balance sheet, but what we kind of tend to miss in this analysis is that had this not come through, we would have seen worse conditions on these sectors and the wages in the sector, and hence the overall growth impact as well. So the fact that we are able to come back and catch up with the output level within 7 quarters is something that has been possible only because of these steps. A couple of sectors still remain scarred and they do need support. So, I mean, I don't see that as a major expenditure item. There is some expenditure switching, obviously, from some of these crisis era sectors onto the service sectors that are still impacted. So we'll see certain switching in terms of sectors, but not overall impact on the government balance sheets.
Okay, that's a very important point. Uh, so, what is your view on the 8 to 8.5% of GDP? It's a conservative one. It's quite achievable. Obviously, it doesn't look ambitious for sure, because we also spoke about the double-digit growth earlier, and now at least we have come to a level where it looks a little achievable. But what is your view?
So, I mean, our forecast at this point of time runs anything between 7.5 to 8.3. So it kind of overlaps with what our internal forecasts are at this point of time. But do remember, it's a projection for the full year. And there are
Yes.
multiple uncertainties at this point of time that we are taking in. I mean, there is an assumption, even an economic survey, on oil prices remaining at a certain level, geopolitical tensions not
Yes.
escalating, on paper not having an impact. So all of us are working on Excel sheets with some of these basic assumptions, and that uncertainty, at least for the short term, hangs heavy. So I see a more downward risk to this 7.6 to 8.3 that we are talking about. Um, let's hope things turn out better in the second half.
Well, truly, let's hope that. I also wanted to take your view specifically on the formal versus informal economy. After GST, there are a lot of changes happened specifically in the informal economy as well. But what kind of progress do you think how we have made specifically towards formalization from the informal sector, and does that also have some impact in terms of on the economy? Because after demonetization, there was a big impact on a lot of businesses, right? So now everybody wants to move towards the formalization from the informal economy. How do you think that is shaping up?
So, my view on this is again the whole impact of formalization in terms of employment and hiring versus formalization in terms of payment and all is very, very different. So, for example, the economic survey has a chart that kind of describes in terms of each sector that which are the sectors where the concentration of informal employment is very high. And if you look at it, for example, real estate figures with 84% of employment, which is informal. So while on one side we are talking of digital, we are talking of financial inclusion, we're talking of formalization in many sectors, do remember that is not necessarily translating onto formalization on employment side as well. And hence, what you call as informal sector need not necessarily be your mom and pop shows or the furry sitting outside. It's also very much present in the so-called formal sectors. So that's why I gave you the example of real estate. And hence, you might have policy steps that pushes towards formalization, and we do see in the pandemic world where the formal world is becoming much more healthier than the informal side. But given the fact that employment trends are still not as dynamic or changing towards formalization, the income impact actually essentially follows the employment and hence consumption side. So to that extent, I really don't see it as a picture of what the markets are saying, where your formal side profit levels are very high. Even there, if you notice, your top line growth doesn't really necessarily match up with the wage growth in many of these sectors. So to that extent, for me, formalization would really come through when we see that happening in the employment statistics as well. And that's a little long way through, I would say. That's another of the structural change that the economy has to see.
No, no, I think that's a very valid point that you raised on the employment side, because even yesterday we were looking at some unemployment data, not the employment, but the unemployment data in the economic survey. And there are hardly few indicators which you could believe on, because there are no indicators as such because of the informal. But on the other side, now the government is actually betting high on the products like GST, which is giving them a contribution which is really large. So again, not a very direct but very hypothetical question, Rajni. How how do you think this gap will play a major role? Because at one side, the employment ratio will also be important in terms of looking at the growth of the country, but we do not have that strong data because of the informal sector, which is very huge. So, is there any solution? Is there any, what you can say, uh, gap that the government can fill?
it's a gentle trudge. I mean, it's not something that can be done over a day, over a year, or even over 5 years. It's something that has to structurally change in the economy. For long, we've been, and before COVID, we've been talking about how skills don't match. Now they don't get the right kind of skills they want to hire. At the same time, we've been talking to corporates who kind of mention how it's easy to keep hire people in contracts and not keep them as a permanent hire. So there are structural issues in terms of employment regulations, in terms of skill upgradation, in terms of the education, and these are big changes. They don't happen
Yes.
overnight or over a year. So I'm glad to see a 25-year thought process, or at least even a 5-year thought process towards this. We did do very well in the IT wave in 2000s, late 1990s and 2000. One can only hope that this current decade now brings in where we do manage to catch up on the skill side and get on to the hiring side. But do remember, all of this only comes through when you see a consistent rise in income level. That would be a sure sort sign that these we have material gains happening in these skills or employment or these gaps. Otherwise, we will have numbers, we will have surveys, each of them will have different conclusion. It will be difficult to figure out where our realities lie, so somewhere in between. And it's important to see material gains in income level to be able to figure out that the informal side of economy is also gaining. So I think some of the lead indicator would be in terms of consumption numbers rather than GST numbers.
Okay, there was an interesting statement. I mean, we have been talking about it a lot, and the statement was our economy is benefiting from the multiplier effect. That's what the finance minister stated while presenting the budget. When we went into the pandemic, there was a great noise about how India will benefit from China, right? And we are still, thinking about how will we benefit about from such things. At one side, the foreign investors are very bullish on India, but are we actually is the Indian economy taking a much benefit out of it? Because we are talking about the establishing a semiconductor industry, but that will take at least 7 to 8 years to perform. So how do you see that India is actually getting a multiplier effect? I mean, saying is, I mean, that's one part of it, but are we actually getting that effect? Are we actually getting that benefit?
So the multiplier effect discussion actually comes in the context of capital expenditure, where compared to revenue expenditure, that has a multiplier of 0.87. Capital expenditure has a multiplier of 2.45. The material increase in capital expenditure has only come through in last 2 years. Before that, almost 87% of our expenditure out of government balance sheet was on revenue items. So in that sense, 2 years is too small a time for capital expenditure to show up. Having said that, India remains a consumption story, a market story for people all over the world. What the policymakers are trying to do is make it work for us domestically as well. So that bullishness of foreign investors in Indian market comes from the fact that we are one of the largest market and relatively well growing. That's not likely to go away at least till 2030 is what I maintain, where you see that kind of a tailwind working in our favor. What government or these capital expenditure plans are essentially trying to do is make it work for ourselves. And while we've not seen the China replacement story working very well, what these efforts do is that whole Make in India, Atmanirbhar Bharat. Let's focus on our own domestic market, which is big enough to uh, bring all this impulse within the economy or bring this kind of a market size to address. You're right, it's not something that works in a year or in a matter of 5 years, but the kind of, let's say, digital investments or the kind of private equity venture capital investments or FDIs we've seen coming through, they've been able to go beyond the traditional sectors to identify where does the opportunity lie and kind of add real value addition much beyond what our GDP numbers are showing. So there are pockets of economy doing very, very well because they have been able to identify this niche demand segment and kind of address it. So as long as this keeps on growing, this will multiply into the economy and we'll see more. And hopefully by then the capital expenditure side of it, that multiplier starts adding up to the momentum as well. So hopefully in next 3 to 5 years, we do start seeing all of this working together and kind of working on
Right.
our dividend.
Okay, very well said. I would also like you to see how this whole digital central bank digital currency panning out. I mean, there are very few countries who are actually thinking about this, and the finance minister took a very bold step and told us that 2022 to 2023, they will actually roll out the central bank digital currency, which is Digi Rupee. How do you see that actually panning out?
So, in the press conference after budget, actually the finance minister took a lots of pain to kind of differentiate between that this is a digital currency, quote unquote, by the central bank
Hmm.
and not the cryptocurrency as people call it. And she
Exactly.
took pains to explain that the crypto is not a currency. So, yes, it's a forefront. I mean, it's one of the first central banks to come out and set a target, or at least, if not central bank, the finance minister has announced that this year we should have a digital currency. That's something that
Hmm.
was the call of the day. I mean, it's something that already the market was moving towards. If not central bank, people would find other channels to make payments swifter, to make payment easier and fast and cheap. Glad that RBI actually look at the history has always been in forefront in terms of what currency political adaptability in many of these issues. So once again, glad to be on the front line of this.
Hmm. No, no, true. In fact, RBI had made it very clear that they are not very happy with the cryptocurrency, but they will look at CBDC at an appropriate time. I think they said this almost 1.5 years back, and the government actually take what RBI said forward. So let me take one last question, and this question is again a follow-up on what was my first question. So considering what has happened, it's not just infrastructure, or it's not just capital expenditure, but the Gati Shakti program of PM or economy or whole sustainable development programs, roads, railways, ports, airports, logistics, waterways, they're trying to build everything and interconnect everything. Considering all this, ecosystem which they're trying to build, uh, do you see now there will be change in the credit growth? Starting from maybe tomorrow, starting from the 1st April itself, do you see the mid corporates, or I'm not talking about the large, I'm talking about the mid and the small, will come to banks and start crafting their capex plans?
So, we already have a data point that tells you that credit growth has started picking up. And we, as I mentioned, in the moment we see
Hmm.
substantial gain in demand levels, there is no reason credit growth will not fall off. I mean, everything else in the ecosystem is ready and set and waiting for credit growth to pick up, for investment demands to pick up. And I'm personally of the view that we probably just in the phase before that and a quarter max, and we should see this cycle turning because government is also front loading. All the other conditions are set. If the economic survey were to be believed, then the debt levels are also not high on the household side. Corporates already sitting on healthy balance sheet, so we should see demand level coming and then credit growth. So I'll give it max a quarter for it to really show up in a sustained double-digit credit growth.
Sure. Notable, I think, points. Thank you so much for uh, sharing time with us and sharing this perspective on the budget day. Thank you so much, Rashmi.
Thanks very much. Pleasure being here.
Thank you, ladies and gentlemen, for joining on the ETBFSI Budget 2022. Thank you so much.